You started a business to sell your products, not to drown in receipts. But here's the truth: if you cannot understand your numbers, you cannot grow your business. In this video, I am going to teach you how to build a bookkeeping system and how to maintain it in 5 easy steps. But before that, let me introduce myself. I am Hasnain, a certified professional accountant. I have spent 10 years working with financial statements and business books. On this channel, Debit Decoded is where I break down accounting in simple and easy steps. So, let's start today's topic. What is bookkeeping versus accounting? Let's clear up something first. A lot of people mix up bookkeeping and accounting. They are not the same thing. Bookkeeping is the recording of every sale, every expense, every payment. You write it down, you organize it, you keep it accurate. Whereas accounting is the analysis where someone looks at your books and tells you, are you profitable, are you growing, should you cut costs. Here's a simple way to remember it. Bookkeeping is collecting the ingredients while accounting is cooking the meal. You need both, but bookkeeping comes first. That's what we are focused on today. Why bookkeeping matters? Now, the next question that comes to mind is, why does this actually matter for you? Three reasons. Number one, you need it for taxes. Clean books make tax season painless, while messy books make it a nightmare. Number two, you need it for decision making. You can't grow a business you don't understand. Number three, you need it if you ever want funding. Investors and banks want to see organized numbers, not guesses. So let's build your system step by step. Step 1. Separate your business and personal finances. Separate your business money from your personal money. This is the single most common mistake I see new business owner made. They run everything through one bank account. Personal groceries and business expense all mixed together. Don't do this. Open a dedicated business bank account, even if you are one person operation or even you are just starting out. Why this matters so much? Because mixed account creates messy books. Messy books create stress at tax time, and in some cases, they can even create legal problems for your business. One simple rule: if it is a business expense, it goes through the business bank account, nothing else. Step 2. Choose your accounting method. Choose your method of tracking money. There are two options: cash basis and accrual basis. Cash basis is simple. You record income when money actually lands in your account, and you record an expense when you actually pay it. Nothing fancy, just cash in, cash out. Accrual basis is different. You record income when you earn it, even the customer has not paid yet, and you record an expense when you receive the bill, even if you have not paid yet. So, which one should you use? For beginners, if you are just starting out, cash basis is easier to manage. It's simple and it matches how most business owners think about money. And if you have a business which is growing, has inventory, and you work with larger clients on credit terms, accrual basis gives you more accurate picture. Many growing business eventually moves to accrual basis when they scale. Step 3. Pick a bookkeeping system. Pick a system to actually record your transactions. You have three options. Option number 1, a simple spreadsheet. Perfectly fine when you are just starting out with low volume of transactions. It costs nothing and it teaches you what's happening in your books. Option number 2, accounting software. Tools like QuickBooks, Wave, Zero, they automate a lot of your work. They connect to your bank account, they generate reports for you automatically. This becomes a smarter choice when your business grows. Option number 3, hiring a bookkeeper. At some point in future, your time becomes more valuable to spend on your business than on data entry. That's a decision for later, not for day one. So, my advice for beginners is start with spreadsheet or free tools and learn what's happening in your books. Then graduate to the software. Once you understand the fundamental, understanding the basics first will make you far better at using any software later. Step 4, record and categorize every transaction. This is where actual bookkeeping happens. Recording and categorizing every transaction. Every time money moves in or out, it needs two things, a record and a category. Let's say you pay $50 for office supplies. You would record that transaction and categorize it under office supplies or operating expense. And let's say a customer pays you $500 for services. You would record that transaction and categorize it under sales revenue or service income. Why does categorizing matter so much? Because it's what turns a raw number into useful information. At the end of the month, you want to know exactly how much you spent on marketing and how much you earned from each product. And categories make that possible. Here's a simple habit that will save your hours later. Do this every week, not once a year. Record all the transactions of the week while they are fresh in your memory. And trust me, your future self will thank you. Step 5, reconcile and review your reports. Reconcile your accounts and review your reports. Reconciling simply means comparing your books with your actual bank statements, making sure the numbers match. Let's say your book shows $3,000 and your bank statement shows $2,800, then something is missing, and reconciling catches those errors before they become real problems. Do this every month. Pick a date and stick to it. Once your books are reconciled, you are ready to look at your three core financial reports. Number 1, the income statements. This shows your revenue and expenses over a period of time. It also tells you, are you actually making a profit? Number 2, the balance sheet. This shows what your business owns, what it owes, and what is left over. It gives you a snapshot of your financial position on a given day. Number 3, the cash flow statement. This tracks how cash moves in and out of your business. It also tells you, do you have enough cash to cover next month's bill? Common beginners mistakes to avoid. Before we wrap up, let's talk about mistakes because avoiding these will put you ahead of most beginners. Mistake number 1, waiting until tax season to do your books. Until then, you have forgotten half of your transactions. Mistake number 2, not keeping receipts. If you do not keep receipts with your records, you might not be able to claim it through tax returns. Mistake number 2, guessing instead of recording. I think I have spent $50 on office supplies is not bookkeeping. Mistake number 4, ignoring small amounts. This is another important concept in accounting. Small amounts like $5, $10 becomes material when aggregated at the year end. This concept is called materiality. Mistake number 5. Not reviewing your accounts on time. If you do not review your accounts on time, weekly or monthly, and find an error at the end of the period, it might be very time consuming to trace that error. Quickly recap what we covered. Number 1. Separate your business and personal finances. Number 2. Choose your method of accounting, cash basis or accrual basis. Depends where you stand. Number 3. Choose a bookkeeping system, a spreadsheet, accounting software, or hiring a bookkeeper. Number 4. Record and categorize every single transaction. Number 5. Reconcile and review your accounts and reports. Follow these 5 simple steps and you will have your bookkeeping system that will eventually save you from stress at tax time and will give you real clarity on your business. Until next time, keep learning and keep growing. I will see you in the next video. And this is Hasnain Aslam reminding you every great business starts with understanding their numbers. Until next time, goodbye.